Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, it's been a challenging week for the Australian dollar, having contested the downside level around 67.60.75 on 4 attempts, has been respected and rebounded. However, I would like to see further upside momentum coming from these indicators, although they're not quite there to support a rally on towards 68.55.60 and beyond after the recent challenge towards that top side failed. Nevertheless, if the market does pick up, then we could see the clearance of that region around 68.55.60 and look on towards 69.35 to 70 cents. Any weakness, I do anticipate further demand from that region, noted at 67.60.75. The euro is coming underneath further pressure as the market now takes out the level of 101.70. It has exposed further weakness, and if we look to the broader picture, you can see from the monthlies that we are looking possibly down towards a region of 99.1595. But we are getting awfully oversold, and the fact is that the market may stage a recovery soon. However, with the dollar index, which measures the greenback strength against a basket of 6 major currencies, still hovering around the near 20-year highs of 107, does give further indication that the market may take a little bit more of a tumble. Into the coming session, we still have the non-farm payrolls numbers, with an expected 260,000 jobs added, with the previous number released was 390,000 jobs. Any rebound may see resistance around 102.15 to 102.60. The dollar yen was slightly on the weaker side after reports from the news that ex-Japan PM Abe was shot. However, little news has come since then. Nevertheless, yen strength coming back into the market has dented the indicators, and therefore keeping to the view that I'm holding technically that the market can reach the region of 134.70, or where this line is outlined at 133.70.90. With the news that Prime Minister Boris Johnson has resigned, the pound found renewed momentum, and from that, still at this point hasn't clearly got the bullish confidence as yet to rally on towards that trend line, which is seen roughly around the 123 area. Still, technically, there is some bullish divergence from the MACD that may give further confidence for the pound, but we do need to clear the 120.55.65 area, which was briefly contested today. If seen, then the market may actually find further momentum on to challenge that top side. However, ahead of the non-farm payrolls, we may see a little bit of a mixed play in terms of sentiment, but I feel overall we are getting somewhat oversold on the broader case. As you can see, the monthlies, like the euro, is very, very oversold. So we do expect or warrant some kind of recovery soon. Looking at sterling CAD, well, the British pound leg has found momentum and rebounded off the level of 155.20. Let's see if this pattern can continue. I would like to see further strength to the pound to support this leg and rally on towards the region of 157.25. To some degree, the market is still remaining weak when it comes to gold. And if we take out the level of 1,738, that would give further exposure towards the next target, which if we look at the monthlies, comes in at 1,690. The heavy candles and the lack in demand, and also the ADX, does give further conviction that the market may actually head lower. But keep an eye on that support level, as mentioned, at 1,738. Wrapping up with oil, well, the market rebounded from that low side of 92, but found resistance at the region that is of 101.20. If the market does respect this level, we can easily see a tumble back towards the bottom side. As at present, the technicals are negative. However, do keep in mind that a clearance of 101.20 could easily put further bullish interest to the targets of 103.50 to 104 or even 109 as this roller coaster continues on However, we are getting close towards this candle here, which is about middle of the range. So if we do see a rejection, this could be the second time, then I do expect to see a pullback to 98.5 and then $95 a barrel. Well, that wraps it for the week. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.